Good morning, everybody. This is Patrick MontesDeOca with the VCPMI early morning update for December 18th, 2020. Let's go right into Ticket-Tocker live trading room and see what the day looks like today. We're looking at the gold market down 480, trading last at 1885. We're looking at silver down about 20, 21, 22 cents. And we're looking at the E-mini down about 10 points as well. It looks like we're into a little bit of profit taking here on the gold market. Trading now below the average price of 1886. A close at 715 below the average of 1886 is going to activate the bearish trend momentum, and it's activating the 1871 level, which is the buy one level for today. Take a look at silver here. The silver market as well is trading on the average price of 25.97. And so there are no day trading signals so far for day traders. Waiting for the market to identify the highest probability trade for the day, and that would be either a rally above the average to 2660, which is the extreme above the average, or the buy one level of 2563, which, by the way, coincides with the weekly sell to level, which is now support because the market is trading above it. When the market breaks through the resistance, it becomes support, supporting the next price fractal. And the levels above, which integrate the weekly or monthly or annual or all of the cycles, are the targets above or below. The E-mini is down 1675, 3696. We are basically breaking through 3698, which is the sell one level that you see here on the right, and we are entering into an area that is called pretty much support or accumulation of supply, where the blue area identifies the probability area that this is where buyers may congregate. And what we will see is how the price relates to the supply and demand that we're trading down here. So for now, this is activating a kind of a mixed signal, a daily buy signal from buy one, and a short weekly signal from 3698 on a close below at the end of this bar, this 15-minute bar. So we'll keep an eye on this. the market got up to 37.23 yesterday on the mini, and we see that it found sellers up into that level as the VCPMI was expecting or identifying this area of sell 1 to sell 2 now to be big distribution of supply levels, where we can expect probability wise that we could experience sellers supply into the market. And the high yesterday of 37.23 identified where that basically was activated. So we'll keep an eye on this market, and let's take a look at GBTC, which is a market that we are tracking and trading actually more actively, as it is a great tradable instrument. But you can see here that the high was made yesterday at 30.92, and we pretty much came down from there. So let me take a look at the robot here, what it says. Just a note, you can see the market in the E-mini here reverting from that buy 1 level here that we identify as support, which is in the blue level here at 36.98. So it's activated so far a trend alert, and it's telling us to prepare and wait to see what happens here. And first of all, at the close of this bar, this first bar completes the pattern, the previous pattern, and it enters into the next level of, in this case, support for the daily. But as I looked at the chart, we have a kind of a mixed signal here, so we want to take a look at this in a little while. But I wanted to come back here to Bitcoin that we are trading, and it looks like it yesterday 30.92 potentially could be a short-term top. The data is just unloading right now, and I want to see what GBTC. Yeah, the market is digesting the data right now, so we'll take a look at it in a little later on here and see what the robot seems to be indicating here. But coming back to the gold market, trading pretty much around the average. Yeah, we're going to take a look and see if there are any signals here for the day. Silver found a little bit of support on the average. The gold market as well So let's watch the market here for the time being for a few minutes here. The data is just processing right now at the early morning opening, but we can see that the gold market is showing some support around the 1880, which is the daily average, 1886. We came down, tested it, and on the close here of this bar, if it closes above it, it brings back the bullish trend momentum for the day. And this is what the average does. And the VCPMI algorithm is not is written basically in C++ language code, and it tells the robot not to trade around the average price. So the robot is neutral. The system is neutral. And it is neutral because the mathematical dimensions on the average are 50-50 standard deviation to the relative implied volatility to the extreme level above or below the mean. In this case, the cell 1 level is the extreme level above the mean, and it's a one-to-one factor with a 90% probability that basically the reversion to the mean could unfold from these levels. Now, one thing I want to point out to you is that if you look at the weekly number of 1904 and you look at the daily number of today, 1907, you're looking at almost a harmonic relationship between the daily and the weekly. And if the market has the capability, where if this bullish uptrend activates the 1907 target for the day. As soon as the average price activates the bullish trend momentum, it activates the level above as your target. In this case, the daily level of 1907 has been activated. Trading futures, trading around the average can get very choppy. And if you want to trade there, you can. It's just that you got to be prepared to use reversal stops, which is means that every time the market trades above it, if you're short, or below, if if you're long, it basically will stop you out. So you got to be trading choppy, getting stopped out constantly until the signal resolves in your favor, and you can hold on to it. But I personally would say to you that I choose to trade the highest probability trades. Momentum traders or whatever traders that want to take the signal are obviously always free to do so. But following the systematic approach to the market, to the intelligence behind this system, you don't necessarily have to trade every single trade in order to feel that you're in the market. But the way that I capture the essence of the market is primarily by positioning myself, using this as an indicator overall in identifying my swing or my long-term core position in the market. And so we're looking at the gold market on the bigger picture here, building obviously fundamentally a very bullish scenario, just based on the economic landscape that that's been dealt to us, so to speak, as a consequence of this pandemic affecting and pretty much collapsing the world economy. So that's the fundamental side of the big picture, which supports a bullish argument and supports the price of gold still to be challenged, you might say, to challenge the highs of 2089 that we have seen. And what I do is as a day trader now, I wait for the highest probability trades. As a long-term trader, I'm well positioned in this market to capture and benefit the bigger trend unfolding. But one thing I want to point out to you that what's happened here, based upon the work that we do, is that the market, after making the high of 2089 from the low that we made in March of around 1460 in that vicinity, was the first leg of this market. And the price reaching these levels here pretty much discounted the damage anticipated by the pandemic collapse that collapsed the market back in March. So we saw a rally of over $600 within a matter of months, and we made a high of 2089. And we've been in, and this was back in August 7th, and we've been in this down drift consolidation pattern that has brought us down to what? The low that we saw here of 1767. Now, it took about 3 months for this consolidation to build. And what it appears is that this is a second wave after the initial wave that we saw back from the lows that we saw here back in March. And this whole rally was, on a long-term basis, it looks to be the first leg in terms of Elliott wave terms or wave counts. We use, based on the proprietary formulas that we use, a 9-wave pattern, which is different than Elliott wave. But using wave counts, the principle of wave counts is that the first leg was identified, obviously, from the low of 1451 to 2089. And so that gave us about $120 plus dollars. I'm sorry, $630 plus, so to speak. Around figures, to round it off, let's look at it about $600 leg. This correction here that we're looking at, that brought the market down to 1767 might be the completion of this first wave. And if we can get through this high that here, it's about 1962. Or if we break above this resistance, this Fibonacci trend line resistance levels, we could be formulating the third leg of this move. Now, how to measure the magnitude of the third leg is basically you take the magnitude of the first leg, you double it. So roughly on the average, if we saw, again, a $600 move on the first leg, once we identify the second leg, bottom, or the completion of this correction, and if in this case it's 1767, then you add the magnitude, potential magnitude of the first wave. And so that makes it a roughly about 1200. $1,200 leg up above the low of 1767. And ladies and gentlemen, that puts us into that 3,000 target area for gold. Just using this wave count measurement. So just based on what the market has done using the data of the market technically in order to calculate these wave counts, it's projecting the magnitude up into that 3,000 levels target. If we take a look at the annual and the 9-year cycle, we have here the 9-year cycle, which is on the right of the chart, the structure of the 9-year cycle, that anticipates a target at the extreme above on the sell 2 level of 2712 as well. The sell 1 target of the 9-year cycle is 2299, 2300 roughly. The average price of the 9-year cycle is 1675. And the extreme below that, obviously, you're looking at 1262 in as low as $638. If we take a look at the structure currently of the 9-year cycle, is that the trend momentum is bullish because the market is trading above the average price of 1675, and only when and if it closes below that average price, it would negate this trend momentum that has activated 2299 as the sell 1 target. And we are just beginning this 9-year cycle. We are beginning the next 9-year cycle, which is extremely important. Extremely important to put into focus the long-term structure of the market based on where we are or where we've been the past 9 years. And this is using the 9-year data. On the left, we're looking at the monthly and the annual levels. And so if we take a look at the monthly levels first, which is for the month of December, we're looking at an average price of about 1840. And when the market came down, below this average price at the end of November, roughly, it also activated the monthly extreme levels below that monthly level, below that average, that was all the way down to 1707. And what we saw was basically the market come down under 1840, activating a bearish trend momentum, coming down below the 360-day cycle, average price of 1810, and completing a 50% Fibonacci retracement of the move from the high of 2089 from the recent lows. And from here, now, as you can see, making a low of 1767, we're trading at 1789. So what the VCPMI or the code is trying to define for us here is whether this leg here that we are in is the third leg. So the market is still in a bullish uptrend because coming back down below the monthly, the annual, and completing the 50% Fibonacci retracement, pretty much activated a buy trigger when it came back above 1810 here on the 1st of December by closing at 1819. And automatically it activated a buy, a bullish trend momentum annually. The market ran up, met the target of the monthly VCPMI of 1840, which, by the way, again, these are levels to trade from 1810 to 1840. You know, and the whole idea is, how do you manage the risk in trading this instrument, so to speak? So what I'm showing you here is basically it's a GPS, how the intelligence identifies the trigger points. What I'm doing is reverse engineering the code that was written in C++ in easy language. I opened the code, reverse engineered, and that's what I'm teaching my traders in my private trading room, my private subscribers. And during this hour, as a courtesy, I'm sharing this information for you. But this is the algorithm. This is the intelligence behind the algorithm. So where are we now? We're once again defining here whether this is the beginning of the third based on what the market is doing. And so far, right now, for the day, if we look closer, we made a high yesterday of 1902 and the level above of 1913 is pretty much the active level that has been activated by the monthly signals that you see here. Let's go back to the daily signals here. So I could trade, as you can see, this mathematically all day long, as opposed to fundamentally or emotionally. And I don't need, to listen to CNBC or the chatter, is what I call, to make my decisions as a trader. Trading in the gold market. So we have gained quite a bit of equity here for this month. We've recommended, obviously, if you look at my videos, to get long at 1767, and also when the market came down into this level of about 1820, activating all these buy triggers, and we added basically to our long position. And so we've locked in at 1902 here yesterday. We unloaded pretty much some profits here, and we are hedged, but we haven't eliminated the upside potential, because I think we still have a test to do of 1913, which is the bigger signal. And you can see here the weekly signal coming in, ending today was 1904 on the right of the chart. And the market high yesterday was 1902, so it could not find the strength or the buying strength to meet that target. 1907, right above it, is today's sell one level. So it's almost harmonically aligned to the weekly, and ideally above 1904, 1905 is where I would take a look at and see what the values are. But this would tell you that these levels are levels to take profits. When the targets are completed, the system goes neutral. It tells you, take your profits and go neutral, and then wait for the confirmation of the market that if it closes below after completing the previous pattern, it activates the next trigger point. So it's a systematic way of following the market. I want to share this privately here, that this is our live account balances, and what we have done is that we have accomplished $1 million profit balance as of the close of yesterday. We have made $1 million, $30,101.50 as of yesterday's close. This is based on $250,000 initial capitalization. This will be posted on the website. These are the latest balances that we have. And I am really proud of what we're doing here. The closed realized position so far is 1.6 million, 1,678,559 are the positions that we still are carrying and are invested in the market. But net liquidating value is $1 million, 30,101. This is an amazing accomplishment, and we did it in the time frame anticipated, which was by the end of this year. We started trading back in February of this year. This is an example of how I applied the very same intelligence that I'm coaching and teaching you. And for the last year, it's been a challenging year, to say the least. But this is what we have been able to accomplish during the pandemic in a consolidation market, in a consolidation period, in a corrected period in the gold market. And so I am excited as a kid in a candy store with the ability to be trading this volatility in these markets that are providing me with this incredible rates of return of 400% so far for the year, which is phenomenal. This works, ladies and gentlemen. And I have spent at least, a few hundred hours, maybe over, maybe it looks like it's maybe close to 300 hours since we've been doing this live streaming here in TikToker, where I'm executing the signals, this information that I just disclosed to you. I have recorded in real-time trading over 240 hours, solid 40 hours of real trading, where I have documented what I have accomplished this year by using the VCPMI. And so if I can do it, you can master the same approach, the same methodology in using the VCPMI for your trading. Very quiet market here for the day. And days like this, when there's nothing to do, pretty much, it really kind of is relaxing and refreshing. And I look forward to the days where I don't have to do anything and wait for the highest probability trades to occur. We seem to be pretty quiet here across the board. Trading quietly around the average price. You can see the market is chopping around the average price here. So there's nothing really that is urgently needed to do. One of the things that I want to do for a minute here. I have a question from one of our subscribers that it says, do you believe that Fibonacci levels holds true with commodities since there is an actual deliverable? Let me say to you that the analysis holds true to every market in commodities because you're looking at the technical aspects of the market regardless of the delivery process that occurs. What you're looking at is at the extreme levels of the supply and demand that takes place in that session, whether it's day trading, weekly, or monthly. It's irrelevant that the actual product is deliverable because you're looking at the technicals of the market and not the delivery process. And the technicals of the market or the actual deliverable process is based on the supply and demand. And what the VCPMI does, and also these Fibonacci levels, what they do is they put the price structure into a mathematical, systematic, methodical way of looking at the market, as opposed to fundamentally. Fundamentally, when you trade the markets in commodities fundamentally, it's like trading the average price, that it could go either way. What you want to see is how the market has digested those fundamentals into a technical format, a mathematical probability format that tells you pretty much the extreme levels of that supply and demand. If you have any questions, please continue to submit questions to us. Reach out, subscribe. This is an incredible intelligence that you can apply for your own self-directed trading with extreme accuracy. as I'm doing here, live streaming in a real account, real signal, trading the VCPMI. One of the things that I wanted to share with you here recently is we just a few minutes ago published this article in the Associated Press through Seeking Alpha, and it's pretty much entitled, Will Bitcoin be a currency? And this is a question that, or a subject matter that's been discussed quite a bit in the internet, that is trying to pretty much define, you know, what Bitcoin is doing as a currency in comparison to the gold market. So what I wanted to do is just share with you basically my article, my report here entitled Gold, Will Bitcoin be a currency? Summary. We could look at this as a big margin call on the economy and the US dollar. In March, gold transitioned into a currency. It appears that we're going to be looking at a new economic system next year. The question is, what form that new system will take? Will gold be a currency? Trading is a very individual process. The more that you let your emotions and the chatter of the media influence your trading, the worse you will do. Instead, listen to the market, especially now that the fundamentals have been shattered by this pandemic. The fundamental market collapsed in March. The thing that kept the market alive was the change from a real market to a virtual market. We look at it as a big margin call in the economy and the US dollar. The US has to come up with a large amount of stimulus as demanded by the market, just like a huge margin call. The US dollar, as the world's reserve currency, has seen a large amount of supply in the form of stimulus come into the market. The supply threatens the purchasing power of the US dollar, since more dollars means a weaker dollar. In March, gold transitioned into a currency. Even though the dollar benefits short term from the stimulus and as a safe haven for international investors in the long term, it will decline against gold. When the US dollar was taken off the gold standard in 1971, it created a fiat currency that led to a new debt economy. Debt in 1971 was a few hundred billion. Now we are at 27 trillion. The debt to GDP ratio is above 120%, which is unsustainable. The amount is mind-boggling. It raises questions about the integrity of the system and the US dollar with such debt levels. The US, however, as opposed to its creditors, can print as much currency as it needs or wants. Our creditors cannot print US dollars. We are going to see defaults on foreign loans, as we did in 1981 in Mexico. The only alternative Mexico had to devalue the peso against the dollar. Then the Mexican economy entered a long period of inflation, and the peso went from 16 to 46 almost overnight against the dollar. By devaluing the peso, it devalued the debt in that currency, but it led to a massive inflation. The US will face a similar situation at some point in the future. Financial assets will then collapse. Russia and China in third world countries that are in debt in US dollars are beginning to see a credit crunch as demand for US dollars increases. In response, the US is printing more and more dollars to meet that demand. The US also had to print money to maintain confidence in the system. The government also had to keep interest rates at almost zero. In Europe, interest rates are negative. If you take inflation into account, if or when interest rates rise, then the defaults of this massive global debt are going to be common. The US is talking about another $1 billion injected into the system. Excuse me, another $1 trillion injected into the system. The market, however, is screaming for more money. The demand for more stimulus will only increase next year. New lockdowns will only make those demands even more strident. With the massive printing of money, it will artificially inflate stocks, real estate, and other assets valued in dollars. But at some point, the dollar will collapse. All of these factors are good for gold because gold, unlike the dollar, has intrinsic value. It appears that we are going to be looking at a new economic system next year. The question is what form that new system will take. Will Bitcoin be a currency? Bitcoin exploded today. Will it be a new currency? Bitcoin Grayscale Investment Trust is trading at about 3092 when this report was published, and it was breaking out. The breakout is a reflection of the uncertainty about the US dollar and the mistrust of fiat currencies. Bitcoin has more than 600 billion invested in it. Investors are looking for alternatives to the US dollar. We trade the Grayscale Bitcoin Trust, which is registered on the exchange, as opposed to trading Bitcoin in an unregulated market. With GBTC, you can trade Bitcoin, but be somewhat safer. Our Bitcoin investment is up 6 times since March. We view it as an investment or virtual asset. It's not a currency. You cannot borrow against Bitcoin, unlike gold or other currencies. The volatility in Bitcoin is a trader's dream come true. But you do have to, manage your position carefully, prudently, so that pretty much if you are trading in the futures contract, this volatility can be tremendous for margin calls. So we use a GBTC again as a form of managing the risk. And you can see here basically that back in March, this was at $5. And we're looking at $30, almost $31 here since March. It's a phenomenal instrument to trade. But it is not a currency. It's a virtual asset. And if you follow the herd, I think you're going to find some really real surprises here down the road. Coming back to the gold market, which is a currency, and we are recommending to accumulate the gold market in whatever form you can, do it on a systematic basis, as the market comes down into these levels here that you see, ideally into that 1850 area again. If the market comes down even into lower levels, I think they are providing you with an incredible opportunity for you to add long term. From a trading perspective, short term, The market is approaching near-term targets. It's approaching short-term distribution of supply potentially, as you can see here, but breaking through the 1904 obviously can bring us all the way up to the 1941 level, which is the 23.6% Fibonacci retracement that we're looking at from the leg one that we saw back in March to the recent high. Once again, ladies and gentlemen, thank you for the privilege of spending this time with you, sharing this information, and I sincerely hope that every day that you come here, you become a better trader. Please take care of yourself, take care of each other. I'll talk to you soon. Have a great weekend.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform into the hands of its users who are on the go. Ticker Talker connects novice and advanced traders with